Hello, everyone. Welcome to today's live session. Let me get the risk warning up. As usual, someone's giving it a thumbs down already. We've not even started. I've not even said anything controversial. We do this every day, 12:30 every day. We take a look at the major markets, euro, US dollar, pound, US dollar, gold and oil, see what's going on, our stock market indices as well, see what's happening, and see where maybe the opportunities might be. We've had, I think, some news out this morning that Germany has, by the narrowest of margins, avoided going into recession. Its economy contracted between, is it July and October? So it shrunk, had negative growth, and October to December, the numbers were out today, they had 0% growth. So if that would have been a minus, they would have gone into a recession. But it does show, how wobbly I think previous strong economies are this year. Clearly, the uncertainty about what's going on in the UK doesn't help continental Europe. But I think we've all got our own issues at the moment. So I thought that was some interesting news. Later on today at 1:30, we've got US retail sales. That's probably the only major announcement today. And then tomorrow morning, UK retail sales at 9:30. So let's see what happens. I thought we'd start off with the pound actually, because it's slipping. I thought there'd be a half decent chance of the pound trying to turn things around over the last sort of 24, 36 hours. But it's currently, you can see it on the screen there, 128 and a little bit. So it's currently at its lowest levels for almost a month, so the 15th of January. So that thing that I keep harking back to, let's flip this over to a 4-hour chart. The big vote that Theresa May lost in the middle of January on the Brexit deal, whichever part of the deal that was back then. And we'd seen the market sell off into the vote, touched 126.75 on the day when Theresa May lost the vote. The market bounced back, and since then 128.20 had been a floor. But you can see it is not the case today. Let's flip this back to an hourly chart, because I thought we had that move yesterday morning, when the pound US dollar pushed up to 129.50, and I thought, well, maybe this is going to start sorting out this downtrend that's been in place for most of February. But with the weakness today, that's looking like just a false break, the move to 129.50. So I think it's going to be interesting to watch this afternoon. I think we're right on 128 now. It was 28.20 was a big level from back there. 128 round number, psychological level. I think the risk is for more weakness from here. I think then the obvious target, I suppose, if we're looking at big levels, is around about 127 from where we are now. So for my money, if we were going to just draw in the current trend for the pound, which is still going, following this weakness that we've seen today, it's going to look, where would we pick it up from? Would we pick it up from the highs up here, maybe? I don't know. Why is that not picking it up? Hold on a sec. So we would pick it up from, I think I've got a bit of a glitch in my browser here. There we go. So I suppose our downtrend now looks like that. There we go. It's just slipped below 128 now. So I suppose we'd need to see it back above the highs from yesterday, but that's 150 points and a bit more away from where we are now. So it would take, so at the moment, it looks like any weakness continues to look like a selling opportunity. So I think it's going to be an interesting couple of days for the pound as this 128.20 level, the old lows, have not held. So there we go, giving up gains at the moment. So yeah, I think 127, 126.50 looks like the next big support on the downside. Look, so we're on the daily chart here. Looking at the RSI, we are just about, you can see it here, just about heading to oversold. But as usual, I would be cautious about using things like RSIs in a trend that has been as strong to the downside that this one has been. The last time the RSI was oversold, we've got to go back a couple of months. This is a 10-day RSI. We've got to go back to sort of the 11th of December, around about here. It did prove to be a good turning point then, and also previously the end of October. So the last couple of signals have worked well. But then if we go back to here in August, you can see how dangerous it can be to use these things in isolation. The RSI was oversold, but the market carried on selling off from here for another, what, 5, 6, 7 days or so. So it's going to be interesting to watch, but still under pressure. Pound US dollar. Someone's asking about the DAX. We will get to the DAX. Good move on the DAX yesterday off that level we were talking about. We'll talk about that. And the Nikkei. Yeah, we don't do the Nikkei, do we, very much? But we'll take a look at that today. Japanese market. I think if you're ever up occasionally, if I can't get to sleep, 1:30 in the morning, log on and see what the Japanese market is doing. And I think it's quite a technical one as well, you know, in terms of support and resistance and stuff. So we'll take a look at that. But that's the pound, still under pressure. Let's see what the euro is doing, because the euro is near this big level as well. So we've been talking about this all this week, really. You know, these how tight the range has been for euro US dollar since November. In November, the market broke to I think it was a 16-month, 17-month low, something like that, down at 112 and reversed sharply off it. And then whenever we've sort of drifted below 113, we have seen a pretty sharp reversal off that. And earlier this week, it was saying the same thing. And we did get a sharp reversal on Tuesday, but then it gave it all up again yesterday, and it's stabilized again today. So again, I think it's still very much how it's been this week. If you thought that 112, 112.20, whatever the level is from back here, 112.15 is the low. If you thought that the euro was going to recover against the US dollar, this, from a risk reward point of view, is an interesting place, you know, because it's currently trading at 112.67. That is big old support from back here. So if we were placing stops looking for a longer term move upwards, the logical place to have stop losses is somewhere the other side of that low, 112.20. So your stop loss is maybe 50, 60 points away. But if you think we're going to see a recovery, it's perfectly sensible to expect a run back up to 115 if the market is going to bounce. So we've got 60 points risk, maybe, and 250 points potential upside if it panned out like that. So I think it is. It's interesting down here. It has been oversold. So it went oversold here on the 11th of Feb. Nosed a little bit lower, but we've got a higher low on the RSI. So another interesting one to watch. Let's look on the short-term chart, see what it looks like. So that was the sell-off yesterday. So yesterday's sell-off really started right from the start of the European Open. So from about 113.40, traded as low 11 o'clock last night, about 112.45, came back to it this morning, and it's held. So but you know, that has been a really consistent downtrend for euro US dollar. So bounce or bust time for this one down here, a bit like the pounds, but the euro levels are potentially much bigger levels, because that 112.15 is the low from 2018. So let's see what happens. So some stuff to watch there. Let's have a look at stock markets first of all. Again, yesterday, I think we saw these markets push high. Well, let's look at the DAX first, because we normally do the US markets first. But let's look at the DAX. And I was talking about this level yesterday. It was interesting, I think, what happened yesterday. Let's go back. There we go. That was yesterday, the 13th. So when we were looking at this yesterday, we'd have been 12:30 yesterday, in around here. So about 11,140. So the DAX gapped open yesterday morning, sold off, but held above the lows from most of the day before. So 11,120 had been a big level. It did start moving in the afternoon. So we sort of a 100-point rally off that level, gave it up, blah, 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 and again, we've moved high this morning and sold back again. So the DAX is trying to make progress. I think it's still positive, the DAX. If we take this out, you know, to an hourly view, you know, if we go back to those lows, those Christmas lows, that sort of time, it is trying to make progress. It's not doing as well as US markets, but for now at least, there does appear to be an appetite to be a buyer on weakness. And I think that the obvious levels to look at, it's that gap low from the 11th. So that was that Monday? Was that gap open? Sorry. So Monday. No, it wasn't Monday. Tuesday's gap open. So I think 11,100 to 11,120 in the short term has been a level for the DAX. So for now, at least, I think that the momentum is still upwards. So the obvious target is for a run back up to these highs from earlier in February, around about 11,400. But it's not performing, I don't think, as strongly as US markets. So let's take a look at those. Let's look at the Dow just to see what that did. I think it did push a bit higher yesterday. So if we look at, what's this chart, an hourly chart. So yesterday's trading was here. Here we go. So it did push out yet again, I think, yeah, to fresh recovery highs. So we pushed out again to fresh highs for 2019. So it was about 3 o'clock yesterday afternoon, up above 25,600. So it's the same story for US markets. You know, momentum is on its side. Let's flip it back to the dailies and look at the bigger picture. Here we are. So let's take a look at these levels. You know, it's really overbought on the RSI, but it has been overbought since the middle of January. So again, this, you know, reinforces the risk of just trading solely using things like RSIs. It's been overbought since the middle of January, but the market is still going up. The trend is clearly up off these lows. The next big hurdle, I think, is about 26,000, the highs from early in December, 26,000 through to 26,400, 300-ish up here. So, but for now, you know, the momentum is still up, even though it's looking extreme. If we look at the RSI down here, that the MACD, I suppose, is at its most extreme reading since, well, for a year. But momentum still very much up. So if we look on the hourlies, you know, so big levels to watch. Again, I'd look at things like the previous days, highs and lows. So what was the low from yesterday's session? It looks about here. The in-hours session, the low was just below 25,500. You know, and after that, we've got so many different pockets of support left just from this week. You know, big level down at 25,000. After that, 24,900, that sort of area. So, but for now, momentum is still very much up. You know, so I think even if we get a sell-off, it still looks like a buying opportunity. You know, if we go back to the dailies, you know, where do we have to worry about it breaking below to suggest we're going to get more of a correction? I'd suggest probably these lows. Let me just zoom in a bit. The lows from late January and the lows from February are around about 24,800. I think if we saw it slip below there, you'd have to break a lot of shorter term support levels to get there. So maybe we could see a deeper sell-off. But for now, that momentum is still very much up. So look at the FTSE. The FTSE should be doing well today because the pound's weak. Let's have a look at that. The FTSE, and then we'll look at the Nikkei, the Japanese market. This is interesting. We've been looking at this level for a week or so. We had, you know, the FTSE had been in this downtrend since August last year. The strength that we've had late Jan, early Feb has taken it out of that downtrend. And I was saying 7,200 is maybe the level the more cautious want to see it break to suggest, well, actually, are we going to get a more sustainable recovery? And at the time of doing this, it's at 72.26, as you can see. Let's just flip this over to maybe an intraday chart so we can just see, how many times, you know, since October, it struggled with this 7,200 level. So it's now the FTSE's at its best levels, November, December, January, February, 4 months. So we're at a 4-month high for the FTSE. So I think it's going to be interesting, you know, assuming we can continue above 7,200 today, it all starts to look like a valid breakout, and maybe we can start looking at more aggressive upside targets for the FTSE. You know, I suppose if we're looking at previous highs and lows, then these highs from September around 7,550, 7,600. So it's an interesting one. We'll come back to this tomorrow and see how it's doing. But I suppose if we were looking to jump on board this breakout, how would we trade it? I think there's always a few ways of trading breakouts. There's no perfect way. I think the aggressive way is we jump on it now, wherever it is, 72.23, and put a stop loss the other side of the breakout level. So the breakout level was 7,200. So you put a stop, I don't know, 71.80, something like that. But I would prefer it probably the other side of these lows, maybe from yesterday. So somewhere beyond 71.50. But it's interesting. Now let's we're only 1 day into this breakout. We're not even a full trading day into it yet. But let's see how the FTSE ends up today. We'll catch up with it tomorrow. But that 7,200 level had been a big problem in the past, but it is going through it today. So that's an interesting one. Right, we'll take a look at the Nikkei while we're on stock market indices, and then we will have a look at oil, which has been moving, and gold. There we go, Nikkei 225. Let's just bring that one up. So it has some odd official trading hours, the Nikkei. With us, I think it is pretty much a 24-hour market, but the official market, I think from memory, does it open about midnight UK time and then closes sort of halfway through the day for an hour and a half, then opens up again. So it's a bit of an odd one, but it's an interesting market. So clearly it's the Japanese stock market index. Let's flip this over to a daily chart just to get a bigger view on it. So it's been in decline, like a lot of stock markets, since October of last year. So we could pick up on our trend there. It looks like, again, this is another one that maybe it's breaking out just about, there we go, of that downtrend that's been in place. I was talking about 7,200 for the FTSE. You can see that sort of 21,000 for the Nikkei has been a problem for the last month, and over the last couple of days, it's managed to break through. So again, that looks pretty bullish. And if we were looking at some levels, where are we today? February the 13th, so February the 14th. So the actual lows were just ahead of 21,000. So I think in the short term, any weakness back towards that 21,000 level could potentially be a trading opportunity. But I think it's interesting that it's finally managed to break out above here and break out of that trend line. So maybe we'll sort of nip back next week and see how the Nikkei's doing. But Nikkei and the FTSE both looking quite bullish today and over the last couple of days, based on breaking their trend lines and everything else. Let's look at gold. I think is gold still boring? Let's have a quick look at gold, and then we'll look at oil, which isn't boring. So let's there it is. Gold is down towards 1,300 again. So as usual, the big picture view on gold for me hasn't changed. It's still recovering off those lows from August last year. Our trend is still there. Even if it sells off $50 from here, it's still in that trend. It's just been a very quiet month so far for gold. So if you flip this over to an hourly chart, you can see I think, like I've been saying earlier this week, 1,300-ish to 1,303, 1,304 has been something of a floor for gold. So it's interesting, I suppose, if you were short-term trading it now, we're pushing back to the lows from earlier this week and the lows from also a week ago. So it would be interesting to see if 1,300 ends up being a floor again for gold. But it's been a bit of a boring couple of weeks, I think, for the gold price. But the big picture is still that recovery is still intact. Right, I'll look at oil, and then I'll go and try and answer the questions that are coming in. So I think we're about to upload to our channel a longer term look at gold, a video oil, sorry. So there's a 10-minute video that's been recorded. I did yesterday, sort of an outlook for oil for this year. But clearly the weakness that had been in place for oil since October, that's gone. We've seen this recovery. It's up 30% since the lows in December. So in what's that, 6 weeks or so, the market has bounced back really strongly. And $50, I think, is still the big level, the big psychological level to watch for the more medium-term moves. But it's still strong. Let's flip this over to an hourly. So here we go. So we were looking at this break, weren't we? When was that? Earlier this week. And I was saying, if it sells off back to 52 and it hooks back, that's maybe a good opportunity. But it hasn't looked back, is the long and short of it. So we've seen the price continue to push higher. It's been a good trend, good little trend, this one, this week. Still chugging along. I suppose if I was buying in now, what's the tightest I'd want my stop? I would say probably below the lows from yesterday. So the lows from yesterday were about 1 o'clock yesterday afternoon at 53.60-ish. So if I was a buyer now, trying to follow this trend, I'd probably want my stop loss, somewhere the other side of that. But there's our little trend chugging away at the moment on the oil price. So I suppose in the sort of medium term, short term, sorry, the obvious target is a run back up to $56 a barrel, the highs from earlier in February, and any weakness for now at least still looks like a buying opportunity. So that's sort of good move this week, but I've missed it. But continues to chug higher, and that trend is still holding. Okay, so that's all that stuff done. Let's take a look at some of the questions that are coming in. If you're going to disappear now, just a reminder to find out more about the company, open an account, go to Capital.com, or download our app from either the App Store or the Android App Store, whatever that's called. And any questions, drop me an email, david.jones@Capital.com. But let's take a look at some of these questions that come in. Dropbox. Can we have a look at Dropbox? Yes. Is that one we cover? Let's have a look. Dropbox. There we go. Dropbox. So that's the file sharing app cloud thing, isn't it? What do you think? So I'm presuming it floated back here. When was that? Last year, March-ish, and it's interesting. I mean, it's an interesting one because you could. I mean, if we were looking at it back here, I think it'd be much easier because the trend, back then was clearly down. But this recovery, in line with the broader stock market since Christmas. So how low has it gone? It's been as low as what, $18 a share, and it's currently at what, 25 and a bit. So it's up almost 50%, isn't it? In the last month or so, last 6 weeks or so again. Again, I'd have to say that trend is clearly up. Let's flip it over to an hourly. We sometimes get a few odd movements on the hourly charts. There's our hourly chart. You can see that trend is clearly up, isn't it? So it's a great trend. So again, for me, if I was buying in now, I would probably want my stop somewhere the other side of 24 or even the other side of $23 a share to give it a bit of room to wiggle around. So for me, if it drops $1 from where it closed yesterday, it still looks like a buying opportunity. We could, this sort of 28 area is clearly a problem from August last year, but it does suggest that maybe there's a bit more upside to come here. It's looking a little bit overbought on the RSI, but considering the strength that we've had, that's no surprise. So that recovery trend is still going. So I maybe wouldn't want to buy it at 25.38, but it'd be interesting. I think if we saw any weakness, assuming that trend is going to hold. So that's it's a good example. Good example of a nice little trend just chugging along. Yeah. So if you don't want to trade things like the euro and the pound and oil, I think particularly in US stocks, I think there are always some interesting ones out there. And this is a good example. Clearly, of course, because the broader market has recovered since whenever it was, since Christmas. And the Canadian dollar and the Swiss franc. Let's take a look at that. Canadian dollar. Frank, I must admit, I never look at this one. So let's have a look at it. Let's flip it over to a daily chart. Which is a funny old chart, isn't it? It's sort of it's trading pretty much where it was 2 years ago. And we've got this massive sideways range, really, haven't we? If we go back, how much data have we got here? I mean, it is historically a big sideways range. When it's down at the low 70s, you want to be a buyer, and if it starts getting much above 78, you want to be a seller. So saying that is almost slap bang in the middle of this massive range, isn't it? Let's take a look on the shorter term chart. So we're still in this. So for the year so far, the Canadian dollar is having a good run against the Swiss franc. I would start to question how much upside there is left. Considering what a barrier 77 has been. But maybe in the short term, we'll see another squeeze higher. Let's flip it over to the hourly charts. Looks like we've got a bit of a duff price in there. So I suppose, an aggressive trade, if you thought it was going to squeeze higher from here, we got the lows from earlier this week ahead of 75.80. So an aggressive trade would be to be a buyer with a stop the other side of there. Okay, but it's an odd looking daily chart, that, so I don't think I've been much help there, but there we go on Canada Swiss. Right, we'll wrap things up there. So like I say, 1:30 today, we've got US retail sales. That might be interesting, 1:30, and then tomorrow morning, 9:30, the UK retail sales. And we'll be back at 12:30 tomorrow. Do it all again. See how that FTSE breakout is getting on. It'll be interesting to come back to that. But that's it. Any questions, drop me an email. To never miss out on these things when we go live and when we put other content up, just make sure you're subscribed by pushing the subscribe thing and the alarm bell down there. And see you tomorrow. Thanks.